Internal Revenue Service IRS Tax News. IRS gives tips on filing, paying electronically, and checking refunds online. 2019 tax returns and payments due July 15th. IR 2020-150, July 13, 2020, Washington. The Internal Revenue Service today reminded taxpayers with a filing requirement to file an accurate tax return on time, even if a balance due can't be paid in full. The deadline to submit 2019 tax return is July 15, 2020 for most people. Members of the military serving overseas may have more time. So they've pushed out the deadline, as we've seen a few times. The IRS is trying to remind us that they've pushed out the deadline here. Deadline for the filing taxes for 2019. So 2019 taxes typically due April of the following year, April 15th, now has pushed out to July 15th. Now, it's been pushed out as well as has estimated payments for 2020 that are now becoming due, and some other things that have been extended. Deadlines have been extended here. In terms of both payment and filing deadlines. That means there's probably a lot of people, more people than usual, who are going to owe taxes possibly at this point in time, or have multiple things that are piling up at this time, because the IRS is basically saying July 15th is when we're going to draw the line, start collecting taxes, start saying everything is due at this point, which means that, you could have a lot of people that have a lot of stuff that kind of piled up until that date. So what you want to do at this point is try to lower as much as possible any kind of penalties and interest you may accumulate, even if you can't pay at this point in time. Remember, there's two things that you're concerned with in terms of penalties and interest. One is late filing penalties. Two is going to be the late payment penalties. They are separate. So in order to avoid the late filing penalties, you need to file the tax return by July 15th or put yourself on extension, and that'll give you one thing that you don't have to worry about. In order to avoid the late payment penalties, then you want to pay if anything's due. If you get a refund, if you're going to get a refund right now, then you're okay, no problem. You're going to get a refund. You're not going to have any penalties on a refund. But if you owe money, then you're going to want to pay, even if you put yourself on extension, in order to avoid penalties and interest. What if you cannot pay? Then you want to set up an installment agreement, because that'll then lower the amount of penalties and interest generally, and it'll put you in good standing with the IRS, so you won't be in danger of collection actions or worrying about the IRS, doing something in terms of collection by simply not filing. So you don't want to just not file. You want to file even if you can't pay, is the bottom line. Back to the text. File electronically to avoid most common errors. Filing electronically, there's a link to that here, and choosing direct deposit, there's a link to that here, remains the fastest and safest way to file an accurate income tax return and receive a refund. So obviously they want everything filed electronically. If you send in a paper return right now, it could take longer due to social distancing and whatnot. They're not processing the paper returns as fast. If you're getting a refund, then you typically want to e-file so that you get the refund faster. And if you give them the deposit information, then they'll get you the refund faster. If you owe money, then it's not as big a deal if it takes them longer to cash the check. It may not be as big a deal if you want to send them a check, but just make sure you send it in on time. And like I say, they're kind of pushing for the electronic stuff whenever possible, so that's going to be the easiest way to just get things going. So default would be to just go with the flow with the IRS. They're going everything electronic, so you want to do the electronic payments and receipts if you want things to go as smoothly as possible, typically. Back to the text. Filing electronically reduces tax return errors as the tax software does the calculations, flags common errors, and prompts taxpayers for missing information. So the software really does help in that regard. Even professionals use software pretty much all the time. They're going to use the software. It used to be that you could file a tax return pretty easily without software. I think the fact that the software was put in place meant that the IRS could then ask for more information. So now the tax returns have got more information in them than they may have had in the past. And so you kind of need software just to double check. It'll give you kind of a double check to make sure that everything is in there accurately. And many softwares such as H&R Block or TurboTax, or possibly even the IRS free file software, will have like an interview process to help you to put in, generally the basic information. Back to the text. An inaccurate tax return can delay a refund. So if it's inaccurate, if they flag something on it, then that could obviously delay a refund. Some common errors to avoid include missing an inaccurate Social Security number. So the Social Security number is, of course, how they identify the taxpayer. So if the Social Security is wrong, it's going to cause you problems. They're going to, the tax return, if you electronically file it, it might just kick it back automatically. They might say someone else has filed that security number, or it doesn't match in some way. But if it goes through, that's probably even worse, because then now they're going to think you're the wrong person and whatnot. So that's a problem. Back to the text. Enter each name and Social Security number exactly as printed on the Social Security card. Incorrect filing status. The incorrect tax assistance, the interactive tax assistance, there's a link to that here, on IRS.gov can help taxpayers choose the correct status. So statuses, common statuses, meaning are we single, head of household, married, married filing joint, married filing separate. So typical kind of, there's some confusion oftentimes between single or head of household. Often it's going to rely on a dependent and who might be claiming the dependent. If it's a case where someone, other common questions is to whether someone is married or not. There might be separated statuses, and people are concerned about or don't know whether or not they need to file married filing joint or married or possibly separate or single or head of household in that case. So you might want to go to the interactive tax assistance, because that does have a significant impact on the tax return. Back to the text. Tax software also helps prevent these mistakes. Math errors. Tax preparation software does all the math automatically. Math errors are common on paper returns. So if you do a paper return, if you use, for example, just the forms and just the free fillable forms, then you may be doing more stuff by hand, and you'll be entering the data and having to bring the data from one cell to the next. And when you actually look at the calculations on the tax return, the tax return will tell you exactly what goes in each cell, but it can be somewhat complex formulas. So you end up with this long page of calculations on something that you would think would be pretty straightforward. Conceptually, it sounds pretty straightforward, but then when you actually apply all the little restrictions in terms of the math, it gets kind of long. You end up with a long form. So software obviously helps with the math on that and helps to pull the numbers into the proper places. When you do them by hand, math errors, of course, are going to be more common. Figuring credits and deductions incorrectly. Taxpayers should follow the instructions carefully and double check the information they enter when filing electronically. The IRS Interactive Tax Assistance can help determine if a taxpayer is eligible for certain credits. So credits can be difficult because those are the things that aren't deductions. They're at the end of the return, and they often have phase outs and whatnot with income limitations, and those can be somewhat difficult to deal with. And some of the credits that are the most common for average or mid to low income individuals have a refundable portion to them, which is also nice. It's nice to have, but can be a little bit more complex to calculate. Those include the child tax credit and the earned income credit. So those two credits, you might want to, if you're in the category to take those two credits, you might want to spend some time to think about, how those break out, because there's going to be a refundable portion to them and whatnot. Okay, next item. Assigned returns. Both spouses must sign if filing jointly. Taxpayers can avoid this error by filing their return electronically and digitally signing it. Exceptions may apply for military families if a spouse is serving overseas. So tax returns, married filing jointly, both people, both married and spouses, must sign the return. If you do it electronically, they won't let you file the return until some type of signature or authorization is given. So that's going to be a double check against that. If you have a paper return, then you might make the mistake of one person signing the return, and the IRS is going to bounce it back saying, we need both signatures. Filing with an expired individual taxpayer identification number. So you got to have the up-to-date identification number. Again, the IRS sees all of us as a number, and so you got to have an up-to-date number for the IRS to recognize who we are. Back to the text. In most cases, tax software helps reduce or eliminate these. Find complete details on all the benefits of filing electronically, including IRS Free File. There's a link to that here. Commercial tax prep software or an authorized e-file provider from the file page on IRS.gov. There's a link to the file page here. Checking on refunds. The IRS is processing electronic and paper tax returns and issuing refunds. The IRS normally issues most refunds in less than 21 days. Taxpayers who mailed a tax return will experience a longer wait time. So if you're getting a refund, you want to file electronically within 21 days. They're saying that probably means that you file electronically and you gave them the banking information for them to give you the refund directly into your bank account. That would be the quickest way to do it. If you owe money, then again, you may not be concerned with the turnaround time being as quick for that, but you want to get the payment on time. There is no need to mail a second tax return or call the IRS. Where's my refund? There's a link to that here on irs.gov is the most convenient way to check on the status of a refund. It has a tracker that displays progress through 3 phases. 1, return received. 2, refund approved. And 3, refund sent. So this is really a nice tool because if you file electronically, when you file the returns, one of the things you're most concerned about is whether you got it in on time. Are they going to get it? Are you going to get a late payment or filing penalty? And you get that received return. That means the IRS got it. So you're saying, whew, okay, they've got it. At least I don't have a late payment penalty. That doesn't mean they've processed it yet. But then if they say the refund is approved, then of course that's the next step. So now that they've actually looked at the return, you would assume, right? They processed the thing. And the refund's been approved, and then the third step is the refund has been sent, and of course that would be the final step, unless some other unfortunate happen in the future, like an audit or something. Back to the text. All that is needed to use Where's My Refund is the taxpayer's social security number, tax filing status such as single, married, head of household, and exact amount of the tax refund claimed on the 2019 tax return. It is updated no more than once every 24 hours, usually overnight, so there's no need to check the status more often. So you really only need to check it once a day, so if you're checking it all day, it's probably not going to change because they're saying they change it once overnight. So maybe once in the morning and once in the evening if you're concerned about it, but once a day would probably be the checking status. Taxpayers should file now. Schedule full or partial tax payments up to July 15th due date. Taxpayers can pay online, by phone, or with their mobile device on the IRS To Go app. When paying federal taxes electronically, taxpayers should remember electronic payment options, there's a link to that here, are the optimal way to make a tax payment. They can pay when they file electronically using tax software online. If using tax preparer, taxpayers should ask the preparer to make the tax payment through an electronic funds withdrawal from a bank account. So if you're paying with a tax preparer, they will be typically using tax software. If you owe money, then they should be able to process that through the bank account using the tax software. Back to the text, IRS Direct Pay, link to that here. Also allows taxpayers to pay online directly from a checking or saving account for free. Taxpayers can choose to pay with a credit card, debit card, or digital wallet option through a payment processor. The processor may charge a fee. No fees go to the IRS. So remember, if you want to pay with a credit card, you may have a small fee, but it's not the IRS's fault because it doesn't go to them. It's the third-party processor, but bottom line, you end up with a fee possibly, whereas if you use one of these other options, you may not. Back to the text. The IRS To Go app, there's a link to that here, provides the mobile-friendly payment option, including direct pay and payment processor payments on mobile devices. The taxpayer may also enroll in the Electronic Federal Tax Payment System, EFTPS, and have a choice of paying online or by phone by using the EFTPS voice response system. Can't pay the tax bill? Everyone should file their 2019 tax return by the July 15th tax filing deadline, regardless of whether or not they can pay in full. Taxpayers who owe and can't pay all taxes have the options including. So if you can't pay the tax, again, there's a tendency for us when we can't, we're like, oh, I can't pay the tax, I'm not even going to file the return. You don't want to do that because that leads down to it just causes more stress because then you got to worry about whether the IRS is going to do collection action on you and you feel like this is over your head all the time. So even if you can't pay the taxes, then you could still file the return and avoid the late payment or the late filing penalty, and then you can set up a payment plan basically for it, and that at least can relieve some of the stress. And you could do it of just waiting to see what the IRS does, or how long before they they come back. They might leave it alone for some time, and then 3 years later, you got a huge tax bill after you stop filing for a few years, which could cause problems. Don't want to do that. So you want to file the return and then be, in good standing as much as possible. That will lower the penalties and interest as much as possible. And you can do most of the payment plan stuff basically online without even needing to talk to anyone typically as well. So you have the online payment agreement. There's a link to that here. Most individual taxpayers and many business taxpayers may qualify to use online payment agreement to set up a payment plan. Taxpayers can set up a plan on irs.gov/payment plan in a matter of minutes. Setup fees may apply for some types of plans. So you got the payment plan. That's one of the standard kind of things that you would then set up. Say, hey, the IRS is pretty straightforward with it. They give you a straightforward interest rate. It's not it's good average rate for like a loan that you may get. Not maybe in like today's world with interest rates being really weird with the economy the way it is and the Fed doing funny things to the interest rate. But typically, it's a pretty decent rate that they give on basically a loan. So you're kind of like financing your debt here to the IRS that they owe. So delaying collection. If the IRS determines a taxpayer is unable to pay, it may delay collection until the taxpayer financial condition improves. In light of COVID-19, IRS postponed many compliance efforts until July 15th or later under the People First initiative. So you may have a delay collection option. So what you'd like to do normally, the first step would probably be to set up the payment plan in such a payment that you can pay, which, you try to offer them if you don't have the monthly payments, you try to offer them as low a payment as possible on the payment plan. And maybe if no payment is set up, then maybe you try to delay the payment until you can get a payment plan amount that they would accept for a standard, monthly payment typically. So then we have an offer and compromise, an OIC. Taxpayers who qualify enter into an agreement with the IRS that settles their tax liability for less than the full amount owed. So an offer and compromise is basically what it sounds like. You're basically going to the IRS and saying, hey, look, I owe a whole lot of money. Typically, in the case of an offer and compromise, you owe a whole lot of money. And then you're basically telling them, I don't think, look at my finances. There's no way that you're going to pay that. And the IRS might say, yes, and we want to get as much money as we can. So maybe we lower the bill and we give you a plan that you can afford so that, we can collect as much as possible. So that would be, so usually with an offer and compromise, then you're in a situation where your income is low and not likely to go up and your tax bill is high. Therefore, you can negotiate maybe with the IRS for them to lower the actual tax bill. So normal people, most of the time when you have a payment due, you set up a payment plan. Then maybe you try to delay the payment. And if you're in a situation where your revenue is low, your taxes are high typically, and you don't think you're going to pay that off, then you might want to look into the offer and compromise to do that. You can, there's a lot of stuff on the offer and compromise if you feel that you're in that area, and then you can look for people to help you with the offer and compromise as well. But just you might want to. A lot of the information is on the IRS, so I would peruse that information first, and then consider talking to a professional about it. In any case, back to the text. Find more information on when, how, and where to file tax information for individuals. Need an extension of time to file a 2019 tax return? Those who need more time to prepare their 2019 federal tax return can apply for an extension of time to file. There's a link to that here. An extension of time to file does not grant an extension of time to pay taxes owed. So remember, you can't file the extension. Usually the extension used to go from April, when the tax was due, April 15th, and then it would extend out to October 15th. And now the original date was pushed out to July 15th, but they didn't extend the extended date. So you could still put it on extension, but it's not like it's going to go out 6 months or whatever. It's going to go out to the same end date. So IRS is basically saying July 15th is the date. We're putting everything back online. Dates are going back online, it looks like to me, by July 15th. So you can still go on extension, but the extension just goes right up to October, and then you're back into the normal situation from there until the next strange thing happens. So file an extension request, estimate and pay any owed taxes by July 15th deadline. to avoid possible penalties. Individual tax filers, regardless of income, can use Free File to electronically request an automatic tax filing extension. So if you have an extension, you could ask your tax preparer to put you on extension, but you can do it yourself too. And it might be, if they're charging you for the extension or whatnot, you can, go to the IRS and use the Free File to basically file for the extension. Should be a fairly straightforward form. The most complex part of it is that if you owe money, then you need to make an estimated payment. You won't know. You're going to say, I don't know what I owe. And that's okay. You make it's an estimate. So if you think you're going to owe money, you want to make an estimate so that you avoid penalties and interest. If you're going to get a refund, and you just don't feel like filing yet, you just haven't had time to fill out the thing, but you think you're going to get a refund, then you could just put yourself on extension and you're okay. The IRS sees it as you loaning them money, because instead of them having to give you the refund now, they get to hold on to it a little bit longer. So they're happy with that. Back to the text. Filing this form gives the taxpayer until October 15th to file a return. To get the extension, the taxpayer must estimate their tax liability on this form and pay an amount due. Taxpayers can also get an extension of paying all or part of their estimated income tax due and indicate that the payment is for an extension using direct pay, the electronic federal tax payment system, or a credit or debit card. So if you have to pay, then make sure you can use one of these tools to make a payment. You can file the extension, then use one of these tools to make a payment. Make sure that when you do so, you mark off that this is being applied to the 2019 tax return, and mark off that it's for the extension form, so that the IRS knows where to apply the payment and they don't apply it somewhere weird and then refund it to you or something and then say they never got it because they applied it to the wrong year or something and then refund it or something weird. You got to make sure that when you give them the payment, they know where it's going to, where to apply it to. So this way, we don't have to file a separate extension form and we'll receive a confirmation number for their records. Check withholdings. The IRS encourages taxpayers to do a paycheck checkup, there's a link to that here, as soon as possible to avoid having too much or too little tax withheld this year. That's 2020, right? Because this year, you're paying taxes not for 2019 because you're filing the taxes for 2019 tax return, but the taxes should have already been paid. This year, you're making payments for the 2020 taxes, which you're going to file for in 2021. So, and if you're making payments and you're like a sole proprietorship, then you might be making estimated payments during this time of year. And if you're a W-2 employee, then they're being taken out of your wages, and you want to make sure that the withholdings being taken out are enough to avoid penalties and interest for the current year 2020, which you will be filing for 2021. They have a tool to do that. That's going to be the paycheck checkup, and then the tax withholding estimator tools you can use. Back to the text. Too much normally results in a refund, while too little lends itself to taxes owed next year. So really what your goal on the tax return when you make the withholdings is to have no refund or anything due. You would ideally it would be just an informational return. You pay during 2020, you file in 2021, and you should tell the IRS, hey, look, this is how much liability I have based on the information, and this is how much I paid you, and they're exactly the same. I did it perfectly. That would be doing it perfectly. But it's too hard to do it perfectly because it's way too complex. So typically you want a small refund, and that'll be most likely to avoid penalties and interest. So the refund isn't because you want to have a big refund at the end. It's because having a little refund gives you a buffer to avoid the penalties and interest that could result if you have a large amount that is due. So if your refund is too high, then you probably did it wrong as well, because you could have gotten more money each pay period from your wages. So you may want to adjust if your refund's too high. If your refund's too low, or if your withholdings are too low, then you owe money, of course, and that's a problem. Back to the text. Taxpayers should check their withholding each year, and when life changes occur, such as marriage, childbirth, adoption, or buying a home. So whenever you do something big like that, or a big life change happens, like you got a new job, or someone in the family, that are all on tax return, the same return, got a job and they didn't have one last year or something like that. Or if you buy a new home, that has a substantial effect. Childbirth, it has a substantial effect. So these are things that you want to check out when they happen. So celebrate those events with a tax checkup. That's the way to celebrate. Okay, so the IRS tax withholding estimator is an excellent tool to help people plan and make any needed tax withholding adjustments. And this tool is getting better and better because with tax returns getting more complex and the family earnings getting more complex within families, different members of the family working and whatnot in different jobs. People could have multiple jobs in 1 year. You can have multiple people in the family bouncing around and have like 3 different jobs, during the year at some point. It gets more complex to estimate the tax return. You basically need tax software that's like a projection software, and the tax software and this estimator tool that they're providing here is more like that. It's basically like a software that you can do projections with. You can almost use it to say, what if I did this? What if I did this? What if I earned this much or whatnot? You can use it almost as a projection tool, but you want to use that and think about how much, and then you can use that to think about how much withholdings you should have from your W-2 wages and or how much you should be withholding and paying in terms of quarterly payments if you have your own business like a sole proprietorship. Taxpayers can find answers to questions, forms, and instructions and easy-to-use tools online at irs.gov. They can use these resources to help when it's needed at home, at work, or on the go.